Good evening, my dear members. So welcome you all for the continuation of year-end and book closure series, part 3. So today we are going to have a session on Companies Compliance Felicitation Scheme 2026 and recent judgments under the Companies Act. So for this we have two eminent speakers, CS Thirupal Gorige and CS Sundharesan. So I request C. Kavita Parmesh, Sundharesan. I request C. Kavita Parmesh to escort today's speaker onto the dais. Can we have a round of applause? And welcome the speakers with the books. I request C. Kavita Parmesh to give the welcome address for the session.
Good evening everyone and welcome to this study circle meeting. Like Shripad mentioned, it is a third series on the year-end compliance which will have today we are going to address the year-end compliance on the Companies Act. We did GST and income tax last week and prior to that accounting and accounting standard compliances. Apart from that, we also have today's discussion will be on the amnesty scheme which is starting from today and also the judgments. So Sundharesan sir has a series called Katha Sangama where he will take you through various interesting judgments which will have an impact and as chartered accountants what all we should be aware. And I am grateful to both the speakers, Sundharesan sir and Thirupal Gorige sir, for accepting our invitation and being here. I want to warmly welcome you both for this session. And there are a couple of other announcements. In between, we will have something on the art of living. Shripad will make the announcements. Please stay tuned and enjoy the session. Thank you.
Thank you, Chairperson. It is my privilege to introduce today's speakers. First speaker is CS Thirupal Gorige. CS Thirupal Gorige is a fellow member of the ICSI. He is a BCom graduate. He qualified company secretary in 2001 and has been in practice since 2004, offering secretarial, corporate, legal, management and financial advisory services. He is a registered insolvency professional under the Insolvency and Bankruptcy Code 2016 with experience in handling insolvency and voluntary liquidation cases. He regularly represents clients before authorities such as NCLT, ROC, RBI and other regulatory bodies in matters including mergers, demergers and insolvency proceedings. CS Thirupal Gorige has contributed as a core resource person of the ICSI publication, ICSI Premier on Company Law and has been part of the Company Law research team of CCGRT ICSI. He is also an active speaker at professional forums and institutions including ICSI, IIM, Bangalore and several others. So with this, I present before you CS Thirupal Gorige. Can we have a round of applause for the first speaker? And the next speaker is CS Sundharesan. Sundharesan is a distinguished board strategist and corporate governance expert with over 30 years of experience. A qualified company secretary, he leads a specialized advisory firm guiding Fortune 500 companies on ESG, compliance and governance matters. They have done more than 500 due diligence audits in the past 2 decades and has received notable recognition including most trusted corporate law diligence firm from Karnataka and best full service corporate law firm from South Asia. Since 2006, Sundharesan has trained more than 10,000 board members, earning a reputation as a highly respected speaker in governance and compliance. A sort of a speaker since 1991, Sundharesan regularly addresses corporate forums and boardrooms in India and internationally as well. Beyond his professional work, he is also a mudra therapist, numerologist and avid traveler. So with this, Brief introduction, I present before you CS Sundharesan Jaimurthy. So before handing over the mic to the speakers, I have a couple of announcements. One is about the cruise, RRC cruise, which we have launched. I think it has also been circulated on several CA groups. So it is from Mumbai to Goa. Cruise will be starting from Mumbai on June 8th and will be reaching back to Goa on June 10th. So we have very limited seats. More details are provided on the Bangalore website. So please do have a look into that, and I'm pretty sure you are going to enjoy as well as gain knowledge from this RRC session. And second is about in the previous week we had moot court related session where more than 40 and 50 people from each of the segment for GST and income tax had attended. So where from that we conducted a short kind of examination where 12 from each of the segment were shortlisted, and they will be presenting before the judges or the moderators, where there will be 6 moderators, 3 and 3 each. So it is scheduled on May 9th at Seshadripuram College relating to GST and IT. I request all the CA members, please do attend this moot court session where a practical knowledge sharing session will be done by the participants themselves, as well as the moderators, in the likes of Jatin Christopher and several other moderators will be there. So please do attend on May 9th. More information regarding the same will be provided in a later part. So with this, I hand over the dais to today's speaker, CS Thirupal Gorige and CS Sundharesan.
Welcome to the session. The last we met was a year before. The only year I missed was last year to bring you the series of stories. So what I am going to do is very simple. Take you through some of the really hot cases which has happened recently, and fortunately or unfortunately a designation called CFO. So some of you who are CFOs, who will be CFOs, will start thinking whether to get into the position of CFO, because a simple case where independent director has forgotten to resign after 2 terms. Is there any hand of a chartered accountant in that? Obviously, no, this is not your problem, but you have to pay 1 lakh rupees grant. The CFO paid a penalty of 1 lakh. Now, why me? That is what is the big question. Okay, like Kavita said, please don't scare us. Now, I have never scared you. I only brought you a lot of these cases to highlight what is going on today in the corporate world. And of course, you know what's happening on the statutory auditors, but I'm not talking about you as a professional, even company secretaries. Now, there is a popular case called Kalyani Steel, where the company secretary who is not in employment had to pay, Rashmi is her name, she paid 99 lakhs penalty, 99. Imagine the hard-earned money of ours. No. Why penalty? Should we pay penalty? It's all a $1 billion question. I'll come to that because today the government is very smart. They are using the American style of trying to penalize you, which is jails are full. So I can't keep putting people in jail. So let me earn money for my country. So that is why you will find a person who has got a multiple din. She paid 27 lakhs penalty. I'll tell you all those cases, but the whole learning out here is compliance is not a choice. That, I think the regulator is making it very, very clear that compliance is not a choice. You have to fall in line to go ahead and comply. Okay, that is good for a lot of practitioners like you and me, but people sitting inside corporate, if they feel that it is a burden, and you can't help it, but that is what it is. And of course, during the course, Thirupal will also touch upon the small company concept. I don't know how small the concept of a small company can be, because even when it came to penalty, and the poor company went and pleaded saying that, my lord, we are only a small company. Sorry. It was full penalty that was levied on even a small company. So, how much of defense it is going to give you? I don't know. Okay. Now, where am I going to start? I am going to start on two very popular cases where the CFO got caught. One is Hudson Agro. This is Arun Ice Cream Company. Some of you want to connect with this company. And the other one is called ICICI Lombard. Now listen to this very, very carefully. All of us use WhatsApp. There are two things that can happen on WhatsApp. Accident, incident. When intentionally in the morning you want to tell the whole world that you have gotten up and put your first photograph in the status, that is a incident. Suppose you are doing something which you did not want to put in the status, but it went and sat in that particular status, it is called accident. So only two things can happen in a WhatsApp status, all of you will agree. Incident, accident. Now listen to this case very carefully. Both, I don't know how it can happen, but it just happened in a week's time. In Hudson Agro, the CFO put up the unaudited financial statements, which is supposed to be a UPSI, which is unpublished price sensitive information, on the WhatsApp status. Clear? Now, lot of good things also happen when you put by mistake documents on WhatsApp, okay? But in this case, I don't know, many people slept, or I don't know why. CFO put that up at 5 o'clock in the evening. Next day morning, 9 o'clock, the CFO informs the company secretary that, hey, look, by mistake, I have uploaded these financial statements onto WhatsApp status. So how many hours over? 12 plus 4, 16 hours over. 16 hours. Understand, we cannot sleep. I mean, it's all very difficult propositions. Or what could have happened? I don't know why none of the friends of the CFO called and told. Typically, if I put something on status, somebody says it's a bad photo, or somebody says it's a good photo. What some appreciation I'll get, right? No, in this case, I don't know, for 16 hours, did this person not know that he has made a mistake? Okay. Next, what happens? The company secretary gets into action, and by about 4 or 5 o'clock next day, that day, is when they inform the stock exchange. Clearly, 24 hours has passed by the time this message has been informed to the stock exchange. What is the implication? There is a given of a regulation 30 which is sitting there waiting to be, under LODR, which mandates that if anything you have decided in a boardroom, it has to be uploaded within 30 minutes. If there is something which is internal to the company, you should inform within 12 hours. If something is outside of the company, like the Reliance Facebook deal which happened and nobody knew, including the promoter, no, that's another story which you can read up somewhere. So that was not informed. So if that happens, they get 24 hours. Unfortunately, in Hudson, everything was breached. Now, what was the audit committee doing? What was the board members doing? You can ask a zillion questions. Now, come to the poor CFO, what could have gone wrong, what could have gone right. When an investigation was done, they found out that 19 people had seen this particular WhatsApp status. So one good thing that they did from the company is they got hold of the PAN of these 19 people and blocked them, which is under the SDD and all that, they blocked them, okay. Now this is Hudson part of the story. Now the most important thing here is, can the CFO use WhatsApp with his team members to communicate? There are two things. IT Act of 2000, I am not getting into that. That is valid. But here, what should the CFO have done? What is it that can restrict the CFO from using WhatsApp? Anybody? There is something called a social media policy, or there is something called a code of conduct. In Hudson, it was brilliant. They had a policy, and the policy had restrictions for the CFO to use WhatsApp. Now, please don't ask me that how do you expect me to communicate. All that is next. When the investigation happens, when that person is grilled and all that, next level. But please understand what governs whether you can use the WhatsApp or not is the code of conduct of your company or social media policy. Now come to this case called ICICI Lombard. It's less than a week. The CFO, same incident or similar incident. 5 o'clock in the evening, they find out that CFO accidentally has uploaded the unaudited financials of the company. But look at the difference between how these two companies have reacted. Here, at 1 in the morning, please understand, at 1 in the morning. So when did the company secretary get the information? By around 8, 9 in the night, he got the information. And by 1 a.m., they informed the stock exchange. Whether stock exchange sees it or not is not your problem. It is compliance of regulation 30. Now, the downside of Lombard was, did Lombard have a policy? No. To imagine a large insurance company not having a policy on this particular extent. So understand, a beautiful scenario of Hudson versus ICICI Lombard, similar case, how two people reacted to this case and how it was dealt with is what as a CFO we need to understand. Clear? So, like this, I will split it into board, I will split it into all of these portions. And what we are going to do is between Thirupal and me, I will not speak one shot, Thirupal will not, we will keep exchanging, but with lot of relevance. So when it comes to the Amendment Act, you will find that some of these things get corrected there or they are going to correct. Now, one more thing is the regulator correcting after the case is over or before it is going to happen? So, it is typical, right? The police running before the thief or thief running before the police. So, this will be a dilemma throughout. Nobody can resolve all these problems, but there are some corrections which are suggested. Now, there are 9 roles that are actually taken up. First is what I told you, CFO. Then there is a CFO who is a director of a company. What can go right, what can go wrong, very, very important. Now there is a beautiful case which is on signature, whether it can impact you. Now please understand, if you are a director of a company, if you have a DIN, every document that you sign needs you to mention the DIN below your name. Yeah, all these are looks to be simple, but when the penalty comes in, it's very, very hard it is. Then we have statutory auditors. Yeah, NFRA is playing a big role. Thirupal will share the thing which is coming up in the Amendment Act, which is on DEFRA, NFRA. What is it that is being expected of a statutory auditor? Yeah. Next is MD, CEOs. There are so many startups which are now started by chartered accountants. What is the impact that it is having? What are the liabilities that it has is a big question. Then independent director, of course, a zillion stories where chartered accountants are on board, on audit committees, part of as independent directors, those cases. Then we have audit committee chair, audit committee member. These are two different things. Now I think Kavita was just checking out whether we can do a session separately for this board meeting and audit committee itself on how all these things are being taken up. That's a separate thing. Then we have internal auditor and cost auditor. Yeah, and these are the institutions which are just listed, which are looking out for us, which is SEBI, NFRA, ICAI. Then we have MCA, CBI, extreme cases, not to worry. And then the IT department is a biryani case. When you have time, just go through that. It's a beautiful case. Beautiful case on biryani case, which is how income tax department cracked that particular billing scam. Oh my God, the ingenuity. Now I don't know who to give thumbs up for, but the scam is a scam. So whether it is the entrepreneur who did it or whoever did it, the IT guy, who the tool company which did it, whatever, just go and read it up. Fantastic. Okay. This is what we have been introduced, and this is the new CFO. Now I'll just check if I missed out something on this WhatsApp case. Hudson Agro, yeah, this slide will be with you after the session, so you can keep it. So whether I can use WhatsApp, yes, under Information Technology Act it does not prohibit, but the only thing which is actually binding you is this. HAB, that is Hudson Agro had a cyber security policy which very clearly mandated that the CFO Ramachandran was not authorized to route any official communication through WhatsApp. Clear? Very clear in spite of that. So now if you ask me who will punish the CFO, I mean, just because the case is a case, so I'm just trying to dissect it. Now the case will be referred to the audit committee. Audit committee will call for a hearing. Depending on the veracity or the whatever is the scope of this particular case, they will levy a penalty on the CFO because of the violation of the policy itself. So it's not that drill. Because if the company does not take any action, stock exchange will come into the picture. So understand, somebody has to take a action. Sorry? Communicate what? You can use the WhatsApp to communicate normal messages. But whether you can use it to communicate official documents, no. No. You cannot put it as an attachment and send it across to somebody. Like typically, okay, I mean, there is some practical side to the whole thing. Independent directors. Now if you look at the company, the board will have a separate WhatsApp for the board. So everything they drag and drop into that particular WhatsApp and then send it. Now understand, like Hudson Agro, if there is a policy which restricts, you cannot. If there is no policy that restricts, you can use it. This is the difference. And this accidental thing about the WhatsApp is no excuse for you to not be punished. So you will be punished. So there is nothing called, everything is an incident as far as the company is concerned. ICICI Lombard, yeah, so I just told you the whole thing was about how fast the company secretary reacted in ICICI Lombard. That saved the case to some extent. Yeah. So status problem, very simple. UPSI travels faster than disclosures. Now because of that, if there was some trading, there was some loss, all that still not disclosed. We just did our research till the time the case came out in the public domain. Yeah. Now, does ICICI Lombard have necessary? No. So this is another thing which you need to understand and figure out. Now, this is one more case, Thirupal, and then I will move on and just hand it over to you, which is signature. Now, how did the CFO get into problems? This is another lovely case, and you can just download and check Blue Coast portals. Now, what happened in this is the CFO was penalized because CFO certified something as true and fair. Okay, on this I'll give you one more. There is another beautiful case which has come up where the independent director said, I am only a doctor, I am an Air Force pilot. We don't know financials. They were also penalized. This is another case, by the way. Yeah. So here is a CFO who is supposed to be aware of everything that is stated in the financial statements versus independent directors who are not in the know of financial statements. Please understand. But both were penalized. This case, I will tell you what happened. So there was a 318 crore contingent liability. This is a nice case where they had misclassified that whole thing as advance to supplier. Now that is when it went for an investigation, and when the investigation happened, now that came under the category of unapproved related party transaction. Now I'll come to that related party. That is another big area for a chartered accountant to figure out whether something is coming under the related party or not. Linde case is one which is very popular, and number two is the Kalyani Steel case, which is very popular for any related party transaction. Yeah. Now in this case they found that it was an unapproved related party, and to that extent they found out that there was an Ind AS violation, there was violation under LODR, and then they levied a penalty of 5 lakhs on the CFO, which had to be paid on a personal. Okay, now whenever there is a compounding application or whether there is a penalty, there is a requirement for the individual to pay out of their own pockets. For example, the Kalyani Steel case where the company secretary was levied a 99 lakhs. Can the company pay on behalf of the company secretary or CFO or the managing director? No. Please, because those days, when I'm saying those days about 15 years back, 20 years back, yeah, they used to pay and then that used to be offset and all that. Now you have to produce your statement that it was paid from your own account. So these are the two important cases to start with. I will come back on others where I am just categorizing the CA as a director and I will tell you the other stories. So learning from these two, one, use of WhatsApp for the accounts department, on the face of it, prohibited. That too in a listed company, if you are named as an insider and if you have access to unpublished price sensitive information, it's a zero tolerance policy, which means you will be punished. Okay. Point number 2, signature. While you sign, please take care, ensure that things have been looked into. I mean, you know this much better than anybody else because the provisions which are there for a chartered accountant, I don't think it is there for any professional under the companies. So 2 things which are very critical as we start this journey on the storytelling. Now, on the amendment, I would request Thirupal to come over. Now, this is an amendment which has come up pretty recently, and government has brought out a lot of relaxations and tighter things pertaining to them. So, wherever something on director or issues relating to DIN comes up, I will also pitch in. Over to you.
Yeah. Thank you, sir. I thank the ICA Bangalore branch for providing me the opportunity to share and enrich my knowledge. You all know that very recently MCA has introduced the amendment that is called Corporate Law Amendment Bills. It's not Companies Amendment Bill because they have added 2 things into it, LLP as well as Companies Act. So they call it as a Corporate Law Amendment Bill. Okay. As far as the LLPs are concerned, most of the provisions relating to facilitate the LLPs to do more business at the GIFT cities. So all know the GIFT city, the Gujarat, for all practical purposes it is a foreign territory, not having any tax. It may be direct, indirect tax. To enable more LLPs to jump into that segment, they are making more provision, enabling provisions in the LLP Act. I am not going to speak on that aspect. So I am going to speak about certain important aspects of the proposed amendments of the Companies Act. There are total, 470 sections are there. Out of that, more than 60 or 70 sections were deleted due to the IBC, insolvency and bankruptcy provisions. So you would be having around 350 something odd provisions. Now 200 amendments are expected. Can you imagine a bill having, or the act having around 300, 400 sections, having 200 plus amendments? It is complete for overall being of the companies. So few of them I will just throw light. I suggest if you got any doubt, and please ask me then and then. I am okay to interact and explain whatever I know. The first amendment, that is important thing, they are going to change the threshold limits of a small company. Right now, the threshold limits given by the Parliament are already exhausted by giving notification by the government. The notification came in the 1st December 2025 saying that now the small company means 10 crores capital, paid up share capital, and 100 crores the turnover. Not income, turnover. You know the definition between the income and the turnover. So now they are going to get the enhancement of that particular 10 crore into 20 crores and 100 crores into going to be something more. 200 crores something they are going to get. Now you can imagine what could be the small company. 20 crores is the paid up share capital or the 200 crores turnover. Either of the threshold limit, if you breach, it will not be a small company. To maintain as a small company, both threshold limits should be within that. Then only you will be a small company. Apart from that, there are certain conditions already there in the statute, like Section 8 company cannot be small company. If your company having holding subsidiary relation, I have a company, in fact, 1 lakh capital, and it has subsidiary another 1 lakh. Now, this is not a small company. So what we are doing now, there is a capital restructuring, something we are doing now. Through RD route, we are merging both of them. So then it becomes a small company. So you can think of it like this. So henceforth, small company means not just independent. It should be independent. The whole idea is that we should not having the subsidiary or holding of some other company. Though you have a turnover less than 100 crores or less than paid up 10 crores, still you will be considered small, not as a small company if there is a relation like a holding subsidiary. Here the relation includes, because that holding subsidiary, the holding company definition, the word definition, it includes body corporate. Similarly, subsidiary definition also includes body corporate. Suppose like IBM India is a subsidiary of IBM US. So the holding company need not be Indian company. Like you have a company in India, you want to create one subsidiary at the Sri Lanka. Done. Your company will not be small company. Because subsidiary can be a foreign company or a body corporate. Suppose you have a company and there is a subsidiary or you have invested more than 51% in a LLP. You are not a small company. So these are the combination that are there in the section itself. But we being a professional should aware of it. Not only the paid up share capital, not only the turnover, there are other parameters to ensure to become a small company. There is another parameter in a small company. If you are regulated by any special law, you are not a small company. Like example, special law here like Insurance Act. is not a small company. So this definition, what I understood from the management's ministry's perspective, probably there is an amendment, like in any other country, most of the developed countries, audit is not a mandate. I think you are aware of it. Isn't it? Many countries, like we do audit of so many Indian companies having having subsidiaries outside India, not having audit. They supply unaudited accounts to Indian holding company.
So you mean to say that if it's a small company, then they are going to remove the audit perspective, right?
Yeah, that is proposal is there in they have inserted subsection 12 to the section 139.
But that will have a huge impact on the profession, right? So
That's what I think. We don't know. That may happen in 1st April 2020.
I think you will have the numbers also. Now, typically India, there could be around 1 billion companies.
See, there are total 27 lakhs companies are there in India. Around.
Yeah.
Out of that, around 17 to 18 lakhs companies are active.
Okay.
Out of 17 to 18 lakhs companies, you may get around 75,000 to 85,000 companies are public limited companies, including listed.
Okay.
Then all other are private limited.
So wait, out of these 16 lakh companies which are left out, your perspective, since you are so closely working with MCA,
Yeah.
how many would come under the small company? Approximate, I am not saying about. Because
I will give an example, you will understand that. Now that Rule 19B under the past rule of Companies Act mandates you to have the demand.
yeah,
Okay, if you are not a small company, demand is mandatory. Now, in India, whoever is doing the RTA business, share transfer agent business, na? Every fellow is busy now. Every person is busy. Every company is busy. They are unable to process the demand request even for 2 months, 3 months, 4 months. Even NSDL is unable to cope up their system with the application that you file for the demand, getting ISN number. Then you can see the number. Could be, I feel,
no, because
for 10 plus lakhs minimum.
why I am bringing this to your notice is come 2026 already AI is snatching away so much of the jobs. I mean, even tally, anything you talk about today, AI is a big critical factor. Now, have a separate session on this, maybe it requires larger deliberation for you to understand the impact and maybe what is in store. Now, for example, I'll tell you where I am coming from. Thirupal tells me that the company secretary's apartment is now going to change to 20 crores, obviously because to match with this. Which means the category of companies between 10 crores to 20 crores, already employment is gone. Right? Please understand. See, I am not saying be an activist, go fight or whatever, but to understand what's going to come and hit you itself is a big thing when you discuss something like this. So, one point which I would love to leave here for them is to figure out, Thirupal says around 10 lakh companies would be the impact, which means X number of chartered accountants in practice who are catering to these 10 lakhs, boom, it's going to completely go away. So please, that is one big impact. We are only doing an impact analysis.
Yeah, proposed amendments and their impact analysis.
Yeah.
See, the JPC, the Parliament has referred the bill to the JPC. JPC again, I think you all know, even through the institute and your institute, they are seeking the comments from us. Okay, about this particular amendments and all. Can't we raise our voice, whatever is concerned wise, whatever you say.
Representative.
They have given enough time. I think time is there, 1 more month or something. So we can certainly express our views, express our representations and all. I think that is the best thing that we can do from our situation. Maybe simply giving just paid up share capital turnover, you can think of it different lines, like today's world, this entire IBC insolvency bankruptcy is because of the failure of the loan system. You can just add it. No, if there is any loan, if it is only the promoter money, okay, no problem, no one.
Yeah.
But if there is a public money, don't allow that. Isn't it?
Friends, where it is all coming from, I'll tell you, because he was right. Say for example Germany or for example Malaysia, you have two sets of law, one for small companies, one for others. Now when you talk about the small company, there they are not even bothered. They are saying it is your money, do whatever. So looks like there is a representation to the government saying that if that country can have, why can't we have? Why don't you open up everything for the entrepreneurs? It is their company, let them do. Maybe, I'm just taking a cue from what Thirupal has said. Maybe from a CA perspective, you should look at maybe the loan factor. Forget the turnover, forget the, I'm just giving them per capita. If suppose there is an exposure on the banking, then I think you should insist on the audit. I'm just leaving it. Please check it out when you are discussing in a larger forum. Think about this.
Because that law proposed amendment, as I told, 139 subsection 12, they are giving power to the government to prescribe the class of companies. Power will be with the central government, not with the parliament. So we have enough thing to represent before the MCA. So this is about the proposed definition change of the small company. Yeah, so they want to go digital. We are are accustomed to go for digitalization after the COVID. Now they are going to mandate certain class of companies. Mandatorily to communicate only electronic. I think could be the listed companies. What I found from last 4-5 years after COVID, almost all listed companies, they are doing their AGMs through the electronic mode, and they are not even circulating or printing the annual reports. So I know I am the secretary for one of the largest listed company where you have got around 10 lakhs around worth of shareholders have, means number. Think of it, if you want to print annual report, this is 200 page annual report, around 10 lakhs copies, and to circulate through post. Each annual report will cost you around 50 rupees or 100 rupees close to the post office. So think of 10 lakhs shareholders into 100 rupees is the postage, another 200 rupees is the printing cost. So 300 into 10 lakhs is a small money. So government would like, because some people what they are doing, deliberately they are asking the companies to serve the physical printed annual report. What they will do, we don't know. Maybe next day you will find in the Radhi. They will just satisfy some their things. So they are insisting, writing letter to the listed companies. Now they say, okay, let me enable them, have the only online submissions are placing in their website of this annual report, whatever. So like section 20 is being amended, proposed to be amended, saying that we will enable you to do only online. Don't send any physical data.
So the request proposition is also going.
Yes.
This is if a shareholder wants to.
Shareholder cannot request. Correct? No. Why you want to cut the trees? First question. What you will do with that? Having one share in the listed company and you want to have an annual return, annual report. Similarly, this is another amendment to the ESOPs. This is just they are aligning with the listed company regulation. Unlisted companies also can give the certain class of shares or the options which will not affect the shareholding, which will not affect the control of the company. Like for example, you take SARS, which is famous in the rest of the world. So what we do in this case, we will give some assumption. Okay, you assume that you are holding 10,000 shares in my company. Today, they will write a letter and give it to the employee. And today's rate is only 200 rupees as per the valuation system. After 1 year or 2 years or 3 years, the 200 goes to 500. So as if this company acquiring back those 200 or 1000 shares given to the employee at a different price, 300, 400, whatever it is. That 300, 400 will be given as an employee, incentive. No shares will be allotted to the employees, no shares will be transferred.
This is already there in the US.
No, many Western countries are there. In India, we don't have right now. Due to that, the dilution is happening. Now you don't have that rule in India. We are supposed to allot the shares. After options are exercised, after vesting favor is over, then you need to allot the shares, file the pass through, all those things. But in SIR, they don't need to allot any share. Simply you pay the different price to the employee as it is salary. It is simple. The growth of the price is relatively connected to the performance of the employee. They think if you perform well, my share price also goes. Here the share price is not listed company. You know that all private companies, they are going for a share pricing for the fundraising activity, for some other purpose they are obtaining share price. So employees also will pay with that price. Another issue also there, I have seen some companies having ESOPs allotted, they are unable to provide any exit route to the employees. Because they don't go for IPO, the employees will continue to be there. Or sometimes they left the employment and tomorrow you want to conduct some short-term notice meeting and you will not be able to trace them where are they. So that difficulty is also there. Okay, if you go for a listing, then okay, no issue. If there is no listing, where is the exit option? So thinking all these, parameters, government thought that let us also enable the unlisted companies to have the similar guidelines of the listed company to have the shares.
This is a good move, but don't you think it will impact 62? Section 62?
No, that 62 amendment is being there. They are amending to 62 only.
See, there is a concept called warrants, which is, it's just a paper.
Correct.
So I will just allot 10,000 shares to you. So you mean to say I don't have to record this allotment anywhere? Or, no, I'm just thinking.
Yeah, see
about the process.
Yeah, that's correct. See the warrant, the word warrant has been removed from the new act. Now see, if you accept in your accounting treatment in the schedule 3 while presenting, because you need to enable the presenting of the old balance sheet as well. So except there, nowhere in the act that warrant word is there. And very recent, around 1.5–2 years ago, they made all companies issued warrants under the 1956 Act. 1956 Act, only public limited companies were allowed to issue the warrants. As sir told clearly, warrants are bearer instruments, not having anyone's name. So only public limited companies were allowed to issue the warrants in the old Act. Now the warrants are not allowed to be issued even by the public limited company. They withdrew that particular rule. And they mandated all public limited companies to convert them immediately to shares if they are not in the physical mode, because the demat is mandatory for them. You convert them everything to demat, and if the no shareholder is available, you transfer that entire shares to the investor protection fund.
From a statutory auditor point of view.
Yeah.
Now this SAR which you are talking.
Yeah.
Will it come in the books or it is outside of the books?
No, see, till probably, if you see the SAR, there is a concept called accrual basis. As per section 129 of the Companies Act, the auditor has to ensure the books are made at accrual basis. So when you have allotted or when you have given it grants as a SR to your employee, you are supposed to account it. So there is a notional price accounting as if it is your expenditure towards employees. Another one, towards the employee side, it is an income item. So that notional entry should pass in the books. It will have it. However, you will not recognize as an instrument in the books or like a share warrant and all these things will not be there.
What will be the impact on the diluted EPS?
There is not diluted because there is no share being getting allotted. Technically, at the end of the 1 year, 2 year period of holding of those options, shares will not be allotted.
Is it a ghost entry?
Yeah.
Is it a ghost entry?
Of course, it is a ghost entry only to affect in the profit and loss account, not affect in the balance sheet. Sir? Yes, he is correct, sir. Phantom stock. It's there. See, this was a demand from especially for the startup companies. Reason is, no one is interested to dilute the stake. Because you start a business with 10,000, 1 lakh, 2,000, then they will dilute from 10 rupees to 1 rupee face value. Now, in that again they want to issue the shares to employee, they are not ready to issue.
Actually, Thirupal, this is a very good move because I tell you, practically there are companies where these employees have got stuck. The company never went public.
That's what I
And
told.
what is happening is even one employee can create problems for the company.
Yes, 1%.
Yeah.
Yeah.
So I think to that extent it's a great move.
Yeah. It's going to be, yes, sir.
So my question is, when you say that formally introduce the section 62,
Yeah.
how does that change? Because this RSC used to be there even before, SARS used to be there even before.
Yeah.
What is the compliance that we have introduced as part of section?
Yeah, the compliance would be board resolution, shareholders resolution, and filing of MG reporting for, for the public limited company. Private limited company, there is no filing. It is just ordinary resolution. You can have a scheme, whatever you want. You can have the scheme of ESOPs, comprehensively covered, this regular share stocks can be covered, phantom stock can be covered, even SARs also covered. Every scheme can be, a comprehensive scheme can be.
Since we are only discussing something, do you think the promoter will misuse this?
Yeah, see this particular thing, even if you look at the existing ESOP rule, they are going to add the words. That means all existing ESOP rules will continue to be applicable to the promoter unless you are a startup company. If you are a startup company, there is a concept called up to 50% you can use the ESOP and the promoter also can contribute. If it is not a startup company, if any director is holding 10% and above, is not eligible for the ESOPs. Or relative of promoter or anyone having 10% and above in the board is not allowed to contribute or to be given as a ESOPs.
And do they have to be employed?
But sir,
Whoever is eligible for SARS and RSC, they have to be employed.
yeah, of course it will be there.
Currently given to non-employees, like a lot of times.
No, employee, you have defined, employee is defined as.
Okay, I think that's a good one, which is there is a concept called ESOPs. That is out consultants, yeah. So basically what happens is I'll just tell you. So
Case
for
of,
example,
case of.
like Rahul Dravid comes and endorses your product, you don't have money to give him, and then what you do is you give some options. So that was outside of the budget. Now, where what Thirupal is talking about, no. Then that would become a gross misuse actually. So to the extent of employee, I think they are bringing only this.
Yes,
Not
not
right.
even sweat equity also you can't give the consultant. I've seen many people are approaching, can we give a sweat equity to consultant? The answer is no, you can't give sweat equity. You should treat, I think the basic concept of sweat equity, contract for service, contract of service. Contract for service, there is a GST applicability. There is a TDS applicability. Correct, no? Contract of service, there is no GST because GST Act exempts the employee-employer relation. Okay, so then when you go with the sweat equity, you should establish there is a contract of service. If you are unable to establish, then it will be like a subject to the GST. That means the person who has provided service is supposed to raise the invoice and it should be valued. Okay, GST should be charged over there. Then after that, any amount payable to him beyond 50,000 should be subject to the TDS. The net off will be given as a ESOP. But that is not ESOP technically. It is just regular equity you are giving. So to avoid this too, what I understood from my little knowledge, they are trying to convert contract for service as a contract of service, which is not valid. The next one is about, they are saying, no, we are saying that no company has no website. Correct now, because certain disclosures have to be maintained in the website, like you have MOA, AOA, SIN number of the company, email ID, mobile number, whatever it is, then MJ7 annual returns, and if you have a subsidiary is a foreign company, balance sheet should be there in the website. So we are taking in all the cases, even for IBM US having IBM India as a subsidiary, they are claiming it is not our website. They are claiming it is a web page giving information about Indian companies being maintained by the US, not by you. It's not by you. So like that everybody is escaping from certain public disclosures. Now government is going to have some class of companies, maybe I don't know what could be the class of companies. Of course, for listed company there is already a regulation 46 is there to have a functional website to have so much information.
Easier way to look is any company which is not a small company should have a website.
We don't know. I'm just giving you an idea. So that is going to be mandatory for almost all those companies. They are going to have this rule. 1 year they are going to mandate.
So, in SARs, when you say it's an unlisted company, an employee wants to leave the company after a year or two. Now, how do you establish if the value of the stock has increased and pay him the amount? In fact, is a valuation of the stock done by the company itself while actually giving the...
No, valuation should be done by registered valuer. No. You cannot have on your own, even your own statutory auditor cannot do the valuation. As per 144, you can't do.
Please don't go by the intent. Okay? You just go only.
No, it is. Valuation, I know all startup.
When I
No,
say
listen,
this,
all startup companies are going pre-many, post-many value. 100 values are there. Don't worry. They are aware of it. Employees being not board members, at least some other board member would be knowing. So they will come to know what would be the value when he is leaving.
Understand, you need an independent valuation certificate.
It's
Now,
mandatory.
you want, no. So that is what, so that will reflect the company's value and based on that they will be making the payout. Yeah.
The next one, very crucial. Sir told something in the LFRA, all the stuff and all. Now, it has been there in talk for last 10-15 years to have a multidisciplinary form, isn't it? Now they have made enabling provision in the form of some amendments proposed to 141, 148, 148 and 204. 141 is about qualification of auditors and 148 is about cost auditor qualification and cost auditor and 204 is about secretarial auditors. In this case they say multidisciplinary form also can be appointed either as a chartered accountant or a secretarial auditor or a cost auditor of the company. The only reason they say, as Sir rightly told, even today or yesterday there was some news item. The disciplinary action, of course, NFR has taken on us. Okay. Henceforth, even exams would be conducted. Henceforth, what is the next one? Registration of our membership is also will be centralized. That is exactly this proposed provision is going to. They say you may be CA member or you may be a CS or you may be a cost accountant. We don't worry about it, but you should also register to be as a member of a multidisciplinary firm. That registration is must.
Okay.
Then only you will be appointed as a cost auditor or a company secretary or a statutory auditor. Otherwise you will not be allowed to get employed.
That is a business model. Because, okay, no. You have heard about ISA, right? Indian Institute of not corrupt affairs, corporate affairs. ISA.
Develop,
How
yeah.
does that survive? A case law is coming up for you. How does it survive? Every independent director has to register themselves. There are 3 schemes: silver, gold, and platinum.
Right.
Which is platinum. Annual life membership. That's it. So they have created a revenue model for ISA. Looks like, please don't hit me, don't go after me, but I'm just saying, NFRA there is no business model. So everything should independently survive, right? So who will fund that? Please continue.
Yeah, so this is a mandatory for.
So 5,000 rupees per year or maybe annual whatever by each of us. You are around 5 lakhs, we are around going to be 1 lakh, plus CM is another whatever, so about 6-7 lakh professionals contributing on an annual basis.
At least 5,000.
So business model is done? Yeah, NFR surveys, yeah.
Yeah, so they say majority of that multidisciplinary firm should be, the partners should be resident in India. Means they should be from resident, not from, that means again to protect our interest, multidisciplinary cannot be outside. That's what second one is the mandatory. Then restriction on non-audit services. You see the 144 right now it is applicable for the company. Now that restriction is extended to holding subsidiary for next 3 years. After post-retirement. You can't go back again and do their any other work apart from audit. That is a proposal.
Then there is something which connects with the audit committee, not the report.
That's there, I will tell you what it is. Yeah. There is a proposed amendment to 134, that is the board's report. qualifications, remarks, and disclaimers of auditor. Right now, what we are doing, one line we write. No, they don't want a one-liner explanation from the management. They want detailed explanation. They are providing, it is a format, mandatorily you provide. They are going to give some
But that is where the problem is, no? See, poor independent directors are asked to send a resignation letter. They used to say due to personal reasons.
No, that
Now,
cannot be.
no, now that is the problem. No, government wants more. Look at what SCFS chairman did. So Chakravarti, yeah. So why did he want them to explain? So he explained. Like that, every independent director is giving a very broad outlook of what all goes wrong inside. So if you are going to ask the chartered accountant now to make it elaborate, how elaborate? No. So understand where you are going to, where the buck is going to stop, I don't know. Because what were all simple are now becoming complicated. What is becoming complicated is now getting into the legal system. Which means it's all going to become a case, right? I mean, over a period of time. I'm just saying, because when you are deliberating, think as what can go wrong rather than what can go right. Like he spoke about SR, I am okay. That's a positive one. But the one that he is proposing now, please think. Similar to what independent directors have gone through, they are proposing it for now chartered accountants. Yeah, please proceed.
Yeah, the next one is about, just I told, 139.12, they are going to add enough provision to the government to prescribe the exempting the audit requirement.
What is that NFRA 1 and NFRA 2? There are two forms there.
Yeah, there are two forms. See, technically, when you get appointed as an auditor of a company which is under Companies Act regular, you know that MCA regular, you got registered with MCA means you are allowed to file the ADT. So all your appointments for the companies are captured through the ADT.
Okay.
There is no problem in it. The scope of NFRA, if you look at that, even the Companies Act, if you see the Companies Act, section 1, subsection 4, it goes beyond companies. Scope, it says companies registered under this Act. One. Next, companies which are engaged in the generation of electricity may not be companies under Companies Act. Companies which are under insurance may not be under Companies Act. Like that, 4 or 5 extra baskets are there. Okay, these extra baskets, example like one example I can give, like a NABARD kind, NABARD is like a bodyguard. If it is into the financial service, Companies Act is a comprehensive statute to regulate the body corporate, like detailed board mechanism is there, management mechanism is there, all audit requirement is there, NFR is there. So instead of writing them in their statute, they say you follow the Companies Act. For those companies which are required to comply with the Companies Act, there is no form under the Companies Act to be filed. Then they brought this concept of NFRA body corporate. If you look at the NFRA section, it says body corporate. Like in this body corporate, you have even your own subsidiaries situated outside India. There also there is no SIN number, correct? No? Where the SIN numbers are not there, still regulated by the NFRA, they want to have a data. That is NFRA.
Correct. The company files. Now what is important is NFRA 2. Now I think as chartered accountants, you should object to certain, I'm just saying, because we are discussing this as a case study. Yeah, it's just a proposal, right? Now they are asking you to disclose client list. On one hand, my government has brought out DPDP, data protection and data privacy. On the other hand, this annual return to be filed by the auditor.
That is
NFRA 2. Client list, fees received, and independence declaration. I have an issue with client list and fees. Are you getting it? That means okay, now you will tell that you download the report and everywhere it is available, fees, because in the P&L it is available. But should we publicly disclose this client list and the fee? Point number 1. That is for deliberation, okay? Point number 2. If they say yes, at least like DIR 12, ensure that it doesn't go public. I'm just giving you 2 tips
maybe.
for you to deliberate, take it when it comes for a discussion stage. Ask them not to share it with the public.
It should not a public document. What sir is trying to say, company is required to file certain forms or certain resolutions from time to time. From the New Companies Act perspective, the 2013 Act, all board resolutions of a public limited company which are required to be passed at the meeting as per section 179(3) are supposed to be filed with the others within 30 days. Now, that particular filed form, that is called MGT 14, was a public document. Whether I am a public listed or unlisted, it's a mandate to file those forms. Then there was a, I think 2016 CLA, that is a Company Law Committee report came. Then we make a representation. Okay, you are asking me to file. Can you protect that? Because there may be a lot of business plans will be discussed in the board meeting. And that is allowed to be downloaded by paying 100 rupees. My enemy will download it. Or any competitor may download it. Correct? No. It cannot be public document. It may be price sensitive information. So I don't want to file. I don't want to go the data out of your network. Then immediately government made a rule. They say, I think 389 some section is there where government can withhold certain information filed by the companies. They immediately made that rule. This particular form MGT 14 filed for those resolutions as per section 179(3) will not be a public document. Like you said just now, DIR 12, earlier form 32 for director's appointment. This form is not a public document. Suppose you got yourself appointed as director, and if they have filed appointment or you resign, if they have filed DIR2, both will not be available either to you or to anyone. However, this form, I think, my understanding, is available if you are able to log in by your DIN number. Like you are income tax filing, what you will do? Any notice that comes now will be in your portal.
The login by the
Direct accountant. No, the chartered accountant I am talking about director.
Oh, you are talking about DIR 12 now.
DIR 12. There it will be available.
Okay.
This chartered accountant, this
NFRA
portal.
1 and
No,
2.
correct. This NFRA 1 is being not filed with MCA. It is filed with their portal. NFRA portal.
So NFRA 1 and NFRA 2, the proposal is to file with the NFRA, not with the
I
MCA.
feel that is my submission.
Yeah, because it was another form, so I
Ah.
thought it is automatically routed
No.
to MCA.
Anyhow, we will see and wait what is going to happen.
But
anyhow, you can make a representation.
Exactly. Those-
Make a representation, don't make this document as a public document. Because a lot of Data Protection Act is there. Data Protection Act is applicable even to government also. Correct? No. Income tax, after collecting by date, they can't spread whomever they want. They can't do it. Now the next one is a threshold limit for the CSR. Right now, 2% of average 3 years profit of 5 crores or 500,000 net worth and all. So threshold limit is 5 crores per profit or 500 crores in turnover and net worth of 1,000 crores, something like that. Now this 5 crores profit, they are going to remove from the section. They are going to give the power to the government. So there is a possibility government may enhance these 5 crores to 10 crores. So unless you hit the 10 crores radio button, you will not be required to spend the CSR. So it is a good move. Government is going to take a power to enhance the only profit power, not the rest. Yeah, this 186 is a very draconian section. The loans to body corporate and other person or guarantee security to body corporate and other section. This section is not a compoundable section. It has imprisonment. 2 years imprisonment is there mandatorily. So from that section, 2 subsections they are removing from the imprisonment. That subsection 9 and 10, these 2 relate to maintaining of register under the 186. Whenever company gives a loan to any person or body corporate, they should maintain a register. Non-maintaining of register is a compoundable offence. That much only they are giving relaxation, not from the whole section. 185. This is very, very draconian amendment. I don't know how many of you is going to affect. Till date, the word firm In the throughout Companies Act, you don't find any definition except for your auditor chapter. In the auditor chapter, below at the end of chapter 10, it says form includes LLP. Only for that chapter purpose. Because LLPs also can be appointed as an auditor. That is the whole idea. Because LLP in the 141, it says body corporate cannot be appointed as an auditor. LLP is a body corporate. If you see indirectly, LLP cannot be appointed as a body corporate. To give a leeway there, they say for this purpose, that means for that chapter, right, reading from 139 to section 148, that means including cost auditors. Form includes LLP, like you have your income tax definition, even including 25 definition also says the same thing. Form includes LLP. Only that chapter purpose. Whereas 185, which prohibits the giving loan to directors, loan to partnership firms or partners of the partnership firms, the word firm is not defined anywhere. Even if you go to General Clauses Act, there is no definition. So, till date understanding is that firm means only partnership. So what people started creating LLPs and giving loans to LLPs. This was exploited. To curb that particular loophole, now they are going to amend 185 subsection 1 purpose only. See, 185 has 3 baskets. One basket is a prohibited basket. You can't do it. Means you can't deal with the individuals like directors, relative of directors, partners, partnership firm. 4. Individual related. The next one is about regulated basket. Here body corporates alone allowed. Here the body corporate word is there. Again people are thinking LLP includes body corporate. So let us give the loan to body corporate. So again they don't want to include there in the body corporate word. Instead of including there, they include this side. Firm includes LLP. Third basket is about exempted basket. Like giving loan to only one subsidiaries, giving loan to like managing director, hotel director, or you are doing a business of loan in the ordinary course with subject to rate and all. Those basket is allowed. Don't need to go shareholders approval, no need to get the board approval, all those things. Whereas the first basket is a very crucial basket. Now they are adding the LLPs also there. But it's going to create a problem. See, I have one situation where the 51% in the LLP, the share capital held by the company. 49% is held by the director. Now tell where it will fall. If it is exempted, I can give as my subsidiary, LLP being my subsidiary, I can extend because it falls under the subsection 3 exemption category. Because the word subsection, that subsidiary includes body corporate. LLP is a body corporate. So I am supposed to be exempted category, to be in the exempted category. Because the proposed to do inclusion, I will fall into that basket because my director is holding balance 49%. My partner is, my director is holding 49%. No. So that is the reason you can't give your own partnership for. Means LLP which is your subsidiary, you can't give loan. Unless it is 100% subsidiary, it will not qualify over. Hope I made it clear.
So do the loans already given?
See, the amendment could be any amendment until given as a retrospective effect. All amendments could be prospective. So till date, whatever happened, but prospectively you can't give it. The next one is a buyback. It's a very good section. Even recent amendment of your income tax also says non-promoter the rate is very less, no, comparatively when you do buyback. It was 20% was there, then they removed it, make it as if it is a profit, regular profit or any regular income. It may go to 36% at all. But current provision allows you only one buyback in 365 days. The gap between two buybacks should be 365 days. The closing date and opening date of the next buyback should be 365 days gap. You can't have buybacks within 365 days. Now they are going to propose 2 buybacks in a year.
But what is the use? She has already changed the tax structure. Who is it?
Actually, tax is okay. This tax, see,
earlier there was a difference between a dividend and a buyback and all of these things. We could see some money. Today, if you do dividend, you do buyback, you do anything, it is all falling under the same structure.
understood, sir. Tax is going to be, it is like a cat on the wall. It may fall this side, that side. This year it will fall this side, next year it will fall this side.
So only to reduce the capital it is favorable.
I'm just giving you idea. No, now industry wants more buyback options, especially startup companies. They want to have more buyback options to send the existing investor if they are unable to go to the IPOs and all. Non-promoter. That is a requirement from the industry. So they say, okay, we allow you buybacks subject to certain limit, 2 buybacks in a year, but between 2 buybacks, 182 days gap something should be there. That is you have to ensure, not the 365.
But the percentage remains the same, the 10%, 25%.
That percentage also I think they may remain it, that we have to see how they are going to amend it. Next one is the charge management. I don't know how many of you are clear about while preparing your balance sheet. Assets Schedule 3. After this particular IBC, that is in 2016, there was a concept called whenever charge filing is delayed, either modification, creation or the satisfaction, if it is delayed, you can go to the regional director and get directly what is undo the delay and you can file the form. That was there in 1956 Act. That came even 2013 Act also. It was there till 2016. Once this IBC came into force, MCA observed that some unscrupulous people creating the charges at the backdated, going to the RD, getting them registered and getting the priority over the other creditors. Being a secured creditor, you will get a priority. If you see the waterfall mechanism under 53 of the IBC, the secured creditor falls close to the first basket, close to your employee, which is a workman. First money will be distributed to him. As per 52, you will get either take over the asset or hand over the asset, be in the first queue. So this was exploited during the first 2 years. Then immediately government said, no, I will not give this condonation, or there is no condonation. They deleted the word condonation from the statute. They say, I am allowing your charges maximum period of 120 days. Okay, what happened after 20 days? Then company which failed to file the charge document should report in the balance sheet. They have inserted in the Schedule 3(1) note clearly how many charges were created but not filed with ROC. And auditor also has to verify it, whether that is correct or not. Okay, now it is like it becomes, if you look at the section 77, any unregistered charge with ROC becomes void against the liquidator if company goes for liquidation, void against any other creditor. This any other creditor will be the entire lifetime of the company, not only liquidation. Correct, no? So it is going to be void against all other creditors. And this creditor becomes only any normal creditor. Of course, he can recover the money. He says he has a right to recover the money, but he has no right to touch that property. This is the situation. So 120 days become very thin. We are unable to file any charge document for last 7-8 years, and we were reporting at the balance sheet. Since it reported the balance sheet, banks started crying. We cannot disclose like that because it is going to be like I am a fraud, like that I am writing over my forehead. No, it cannot be. Now, even 120 days also, the filing fees, I think I don't know how many of you are aware of this. The filing fee is generally 400, 600, like that it will go, and it maximum goes to 13 times in any other form. Whereas this particular charge form, there is a ad valorem fees based on the charge amount. It may go to 5 to 6 lakhs also filing fees allowed if you file within 120 days. The filing fees and ad valorem charges starts from the 60th day onwards. First to 60th day means 30 plus 30, normal 30 times you will come.
Who decides? Is it machine will decide?
Machine will decide.
Human being?
ROC will decide. That is the MCA system will decide. So we have paid some cases 5 lakhs, 6 lakhs for filing fees for one form. Like sir told that they are looting. Yes. It is. Now that period of 120 days window is being extended to 160 days, 182 days. So some more, freedom is given that 120 to 180, 160 days they are going to extend it. Probably they may not enhance that filing fees, but we don't know. If it is enhanced, then it will become 10 lakhs also. Filing fees will become 10 lakhs. So charge is a very, very powerful document. Now no bank is giving loan unless the charge is registered. Now they are not extending any even credit facility unless charge is registered. They are not even giving that working capital limit created to my account unless charge is registered. So as an auditor, we should check in our balance sheet whether it is disclosed properly or not. Satisfaction anyhow, they say you can go for a condonation. Even 10 years after there is no problem. Only creation and modification, now this leeway of 180 days is going to be. Now, we have been accustomed to have, AGMs, EGMs through online, no? But till date there is no statutory provision backing for this facility. COVID, 8th March 2020, that they have released one emergency notification. During this particular lockdown, the government is going to make a lockdown. During this lockdown, you have to do any emergency business, you can do it online. Only that circular is there. Then that lockdown came even till September. September we are supposed to do AGM. They say there is another circular for AGM purpose. Those content of the circular will be applicable. For AGM also you can do online. Believe me, the 2020 circular till date is valid. Now government has used the not Companies Act to release the circular. They have not used that circular. There was some essential something is there. I don't know, some government act has power overriding any other provision. So considering that there was industry demand, why can't we insert the provisions of that particular circular into the statute? Now they are inserted. For board EGM, board meeting, general meeting. Board meeting of course it was there. General meetings of all shareholders, listed, unlisted, public, private, all companies can do officially online, and there is a concept called virtual hybrid also. Some can be, right now that hybrid is not there in board. Listed companies, service circular says you can have hybrid, but regularly it is not there. Now they are making it can be hybrid model. That means like now our own study circle is hybrid, isn't it? That no? People are attending from outside.
Yeah, but the people who are attending on this thing will not get attendance.
Right?
People who are sitting here only will get attendance.
No, not great. What is that structure?
No, that's what is, see, I was going to question him on that only. So, today the biggest problem that you are facing from a compliance point of view is whether this hybrid model will even work. Why I am saying is, as per today's law, Thirupal, very clearly, if a meeting has to be a video conferencing meeting, the fact that it is a video conferencing meeting has to be stated in the minutes.
Yeah.
And you have to follow all those things which are prescribed for video conferencing. Correct?
Yeah.
Now, person is on the video, but the meeting is happening in person. Will the person get attendance? The person on the video?
So as per the Companies Act is concerned, they are considered to be attended. There is a quorum requirement, they are considered to be quorum, they are attended, and
There is
one more thing, they want to have it. At least 3 years once you show your real face to the shareholder. So they say mandatorily to have a physical meeting once in 3 years. Show your face at least once in a year. Once in 3 years, that they are going to make it mandatory.
Okay, while on that I'll tell you there's a lot of things which are happening which is, okay, from a CA point of view I think you have to be very vigilant. Companies are not archiving the recordings.
Yes.
See, understand, unfortunately this law has placed that responsibility on the auditor, not even on us. It says that you have to check once in a year whether they have archived that meeting and they are showing. The popular answers you will get is, I recorded but it got deleted.
Correct.
God save those companies, okay, they have not even recorded actually. Then they will say, we recorded but that particular file is missing. These are all the humbug that you will get when you enter the audit scenario, but these, what I am trying to say, okay, today the relief, okay, I will tell you, both sides I can argue. The relief is, once the auditor signs off, then I don't need those records. Because we have presumed that the auditor has taken note of it And the auditor's signature is what we all trust and keep going. Okay.
Yeah, what sir is trying to tell you, there is a rule 20 for the board meetings rules.
Yeah.
In the board meeting rules, how long the recording of the minutes should be kept. Recording of the virtual meeting should be kept. It is written there. There is a till audit. The language
That
you
is the
see,
point.
till audit.
That's a beautiful point. Till the audit. Which means what? You see, as a secretarial auditor, when I go, see, now if you go for any audit, the most popular thing is whether it is contracts or whatever, the auditors are asking. Auditors are asking. I mean, today, if you really look at it, most of the thing comes on the statutory auditor. The other auditors do not play a significant role when it comes to what Thirupal is saying, which are all COVID released circulars. They still have virus. Okay, the circulars are virus. COVID is gone, but the circulars are virus. Let me tell you, it is not vaccinated, it is not cleaned up.
Not comprehensive.
And issue is it is on your, any statutory auditor, whoever is there here, it is on your responsibility that we are all running. But to why I just objected to what Thirupal said is hybrid. Hybrid is going to be a huge problem because that is where you are going to see that people manipulate this hybrid even more.
So there is another requirement, I don't know how many of you, we are facing the legal notices or the investigation notices. The presence of the auditor is not there in the AGM or AGM minutes.
And there is penalty.
146.
Don't
I have seen so many notices, so many penalties paid by the auditors.
auditors.
We would like to draw that, I think after break we will do it.
No,
So
after break there is a small.
it's a really good amendment in the entire history of the Companies Act, 1800 to till date. Always 21 days notice. Correct, no? Everywhere you find 21 days, 21 days. First time in the history they are saying, if you conduct EGMs through VC, you need to give only 7 days. Only 7 days notice, no need to go to the 21 days. This is applicable for all types of companies. Public, private, even listed, unlisted, कोई भी हो. In all the cases, you can just give 7 days notice. Even I am thinking 7 may not be clear days also. If you look at the AGM, they are given 7 clear days notices. I hope you understood what is the clear days notice. They say exclude the meeting date, exclude the notice date. That means that suppose today I send notice at 10 o'clock. Okay, my day is going to end with only another 14 hours. So my day is only broken day, not full. Similarly, if I conduct AGM at 10 o'clock in the morning on a particular given appointed day, that day also only 10 hours. So both broken days means date of notice and date of meeting called broken days, which are not having 24 hours. So clear days means you should remove these broken days. Ensure 24 hours into 7 days. That is AGM related. So this clear word was not there in 1956. There were judgments and Supreme Court said that there should be clear. Yes, it is 7 days, but why? Or 21 days. Then the law was amended or law was modified while drafting the new provision. They added the word clear. Clear means 24 hours into 7 days or 24 hours into 21 days. So that is the reason 21, the day it is serving day and the day it is having meeting, both should be excluded. And if it is sent by the speed post or the normal post, another 48 hours also should be left. So effectively it used to be 25 days for the general meeting like listed or unlisted. Now this particular thing, they have not used the word clear days. The word clear is not there. It seems to be 7 days from today you receive notice, probably 7th day you can convey in the EGM. This is for the all types of companies. The rule is private limited companies anyhow there is exemption notification or
This is not for EGM, it is only for EGM.
no EGM, sorry, not AGM, only for EGMs. AGM anyhow you have to go with the 21 days notice. That is not amended, only for the EGM related.
But what about the controversy of shorter notice?
No, shorter notice, see, shorter notice is still applicable if you want to reduce 7 days.
Yeah.
Like AGM, if you want to reduce less than 21 days, you need shorter notice. That is shorter notice again.
But there is again a problem, no, the proxy related section, where proxy has to be given 48 hours at least.
Yeah.
And ROC says no, you cannot reduce it less than 48 hours.
No.
That is India Bull story, which did 1 in 15 minutes, they did 10 board meetings, general meetings. So how do we deal with this?
Yeah, see, the shareholder has bundle of statutory rights, written, unwritten. The rights are bundled. Some written could be with the appointment of proxy. When I have accepted a meeting with 24 hours, so that means I am ignoring, or rather I am wailing off my right to appoint the proxy. I don't appoint, I can't appoint. When I have given one side, I can't take it back, no. One way I appoint a proxy, one way I give shorter notice, I will take it. So the shareholder has a right to give the shorter notice consent. It is a statutory right. Whether to give, not to give is. If he is giving means, he is ignoring any other related ancillary rights also. One of the ancillary rights is to appoint the proxy. But 48 hours before, those things will not come into play. If it is a statutory, it is shorter notice, which is consented by the given number. See, it is shorter notice. If you see the 101 provision, it says majority. There is a concept of double majority. Okay, to protect the minority people, generally we used to go 90% of paid up value. It used to be, correct? No, 90% you get, okay, there is a correct. Now they say majority in number holding the 90%. That is the section is uses. The language used is majority holding the 90%.
So there are only two shareholders, one person is holding 99%, another person is holding 1%, so the 99% fellow will win over the 1%.
But he cannot be majority, no.
In two he is a majority now.
How? It is only 50-50.
No, excuse me, sir. We are going by the provisions, we are not going by exceptions here. So please continue with the provisions. Members are more interested in the provisions, what are the changes. We will not discuss exceptions here, please.
No, why I brought that point is very simple. You spoke about 7 days. There is also a concept of a shorter notice. So even if these fellows bring in 7 days, I can still go for a shorter notice.
Yes, you can reduce it less than shorter notice. That is 7 days. That's what we are trying to do. That's all. What kind of shorter notice? He has asked the question. It could be with the number, with the majority. In the old act, this was not there. We were just simply getting the 90% value. That is not enough now. That's what I am trying to clarify. Okay, we'll move ahead. See now, there are categories of companies. Small company, just now we discussed about capital going to. For those companies, only one board meeting in a year is enough. One board meeting in a year, that is a calendar year. Calendar year, know it, from April to December is a calendar year. Only one board meeting. Till date, as per section 173, there are 2 meetings. Minimum requirement of the OPC, small company, dormant companies, 2 meetings are there. Now they make only one meeting in a year. It is up to you. When you want to have out of 365 days, suppose you want to have a board meeting, one board meeting on the December 31st, another board meeting you can have it 1st January also. There is no such restriction. Of course, I am giving one more example to you. So one board meeting, it is a calendar year. Calendar year starts from January to December. In this 365 days, you can have only one board meeting. When you want to have, what is the gap between 2 board meetings is not there. What I am trying to say, you can have a board meeting, one board meeting on December 31st December for this calendar year, and next day 1st January also one more meeting you can have it. Still it is valid compliance.
Logically is it not correct since I am supposed to be AGM on 30th September and accounts has to be audited prior to that? Not required?
Yeah, of course you need to do. That is different story. I am just giving an idea. It is possible. Yes, you need to have, because as per 179(3), Accounts should be approved only at the meeting. Board report also should be approved only at the meeting. So meeting, of course, meeting should be there before you get your accounts finalized.
Somewhere between August, September.
One meeting, I think annually one meeting somewhere in the first week of September should be enough. Statutorily, and it will match even your annual filings requirement also. Yeah, this is a very, generally they tighten the loopholes that are there, rather I can say some loose ends that are there in the Companies Act at the LODR level. What I understood from the LODR provision and Companies Act, LODR is applicable to it is like a Companies Act written for the listed companies.
What is the
That is listing regulation. Okay, for the SEBI listing regulation. So there the SEBI used to find out what is the issues, gaps and all there. They used to plug those gaps. It is reversed now. In the Companies Act, you all know that from age old that additional director, if he is appointed, he will be there till the date of next AGM. Correct, no? Not conclusion. The section 161 uses the word till the date of next AGM. Now, there is no such next AGM. They say till the date of 3 months, that is the 3 months they given, or the next meeting, whichever is early. That means the director should be reappointed by the shareholder within 3 months from his appointment.
So the call for an AGM then? AGM?
That's what. Listed company we are doing through the postal ballot. Now all companies are supposed to do it. So it is going to impact you. Wherever you are advising as an auditor for appointment of additional directors, all those things. This is applicable even for the alternate directors also. So only 3 months. Tenure of the director is only 3 months. Which is there in the LODR now.
Independent director.
All types of directors, listed, unlisted, public, limited, or private limited also. So one thing that I would like to clarify, there is one section 152 subsection 3. It says clearly, save as otherwise provided in this act, every director must be appointed by the shareholder. Act provides only 3-4 exceptions. One is additional director, who is there next AGM as of now, and additional director, alternate director, nominee director, director by the NCLT, director by the central government, under section 169 and 167. Only these are the exceptions. This particular section was not applicable to private limited companies. So we were appointing permanent directors through board meetings, no shareholders meeting. That was the old act provision. We were appointing permanent directors from the board, lifelong directors, no need to press their appointment at the shareholders. That was the situation. But in the new act, they removed that provision. They said it is not. You have to appoint, you have to get, even board appoints only in there up to AGM. Till AGM, at AGM we should get here. Now in that AGM again they reduced it to 3 months. They are going to reduce only 3 months. So one should be very careful. What happened, what I understood, why they have gone it, they found from the data bank of the ROC, additional director word as a designation in the master data is continued for years together. And when they inquire about the company and verify the next AGM agenda, there is no agenda for additional director appointment. Technically that company has no director. So every additional director ceased to be a director as a date of AGM. Now that they are asking, tell me, who are your directors? If you are not a director, can you sign the balance sheet? That to curb that practice only, they are going to bring.
So we have to call for an AGM then?
Sir, they are going to call for AGM.
Or we can reappoint them in the board again for 3 months?
But 3 months, why you want to do? Again 3 months only, no?
No,
But once you appoint at AGM or EGM, you will be there for permanent. Because private limited company directors are permanent. Retirement rotation concept is not applicable.
but that option is available.
Yes, you can do so. There are one exception is there for this rule. If the additional director, now I place before the AGM or the EGM within 3 months, in the AGM and EGM he is not selected by the shareholder. Board cannot appoint him as additional director again in the next meeting. There is a prohibition. It is written in the 161 clearly. The director who fails to get appointed by the shareholder cannot be appointed by the board as again additional director. This was their backdoor route. We were facing in the old act. Now the new act it's not possible.
I think even the form will not support it, right?
Sorry.
Because if there are only 2 directors and one of them is additional director,
Yeah.
he has to first resign
Correct.
and then another has to be appointed. But the resignation will not be allowed because the number of directors will fall below.
Less cannot be two. Correct. Yeah, next provision, that is the DIN number. See, the DIN number, we woke up in the year 2017 when all DINs were deactivated. After closing the around 3 lakhs companies. 6 lakhs DINs were deactivated that particular point of time. Then we woke up and we filed a lot of forms here and there. And the complaint across all high courts was opportunity of being heard is not given. Okay. Almost he says, I send an email to you. I send a letter to you. Okay. So they produced before that this evidence was given that we are going to close down your company and also number of the DIN number will be deactivated. The problem with most of the email IDs given by the director or the address given by the addresses are old. They are not accessible. Then immediately government came with a scheme concept called KYC. Okay, you said that to Supreme Court that my email was wrong, all those things. Then did you update? They didn't update. Then they say, I am making you to update every year. Like life certificate for the pensioner at the bank, you should also show me whether your existing email ID and mobile number are active. Are you able to get OTPs? Correct, no? Mandatory, OTPs are mandatory. So, now I know how to squeeze you. So, they started OTP game from for that reason. And the problem with OTP, I think Madam was telling, some countries they are not doing. Email of course is a universal email, it goes.
UK.
But mobiles are not going, UK and all. Then lot of problem was created by the different continents and they said, okay, let us relax it. Now they are going to, they made this, means the proposal, 3 years once. 3 years once only you need to use the KYC forms if there are no changes. If there are changes are there within 30 days you have to file the same form. I can wait for 3 years. So it is going to be
It's effective from when?
Pardon?
For 3 years period.
3 years period. Now for the current year,
28.
whatever the DIN active as on the 31st March 2026, that means DIN allotted or DIN KYC done by September 2025, allotted or KYC done being active on 31st March 2026, 1 year already is considered. Next 2 years, 2028
30th June.
by June, first KYC will come for those DINs. That is okay, that trend okay, I am okay, we are also happy. This is the draconian provision which they are going to bring. It is, once your DIN is deactivated, you will be disqualified director. That is a challenge. Whatever the reason, if the DIN is deactivated, could be non-filing of KYC, whatever it is reason. If the DIN is deactivated as per MCS system, from that moment, you will vacate the directorship in all companies as per section 167. This is going to be very unfortunate situation. I will tell you at least DINs for this year we can remember 2028 is the one. Now during the year you will get some more new DINs. Again the year will be 29. Next year, like every year we will have some DINs renewal.
But
As a track of it.
5,000 rupees provision is there, no? When I pay.
See the 5,000 within the due date, now they made it instead of September, they are going to make it only June. They made it June, 30th June. Till June, there is no filing fees. After deactivation, you should pay 5,000 to reactivate it. But by that time, you lost all your directorship.
So how long is this 5,000 into our?
No, once you cross the 30 days, the 90 days time, no, from April to 30th June, you are supposed to file your KYC on the 2028 time. You didn't do it. From 1st July 28 onwards, you did become deactivated, and if this proposed provision comes into force, you will be disqualified director in the company where you are. In all other companies,
You will vacate the office.
you will vacate the office. We don't know how they are going to extend. There is a one more provision called 164 subsection 2, whether if that is triggered, next 5 years also you may not be valid, means you may be disqualified. We don't know. That till that we have to wait how the provision will come into. At least you can ensure, you can say that you are going to be vacating the office. You are vacating the office. Very draconian provision. One should be very clear. And I will tell you the problem with here for auditors. Where is the problem? As per section 143, in your audit report, whether it is a CARO or non-CARO, whatever it is, there is a one provision whether the director is eligible to continue as a director in this company. As per section 164(2), generally you get DIR 8 form. Now, DIR 8 is more comprehensive form is going to be now. This also is included over there. How you are going to certify your report, audit report? If you see, if any director deal is deactivated in the master data as a date of signing up your audit. So, you can't certify that particular CA certificate, that is audit report. So, it's going to be little tricky. So, I feel maybe some representation can be made. Since we are paying 5,000, don't make them vacating the office.
What if deactivation was for full year and only on the date of signing it becomes active then?
No, but by that time we already vacated, no, all the positions of director.
So 164 to my today mentioned he was not a director for that period.
He was, no, he can't be reappointed automatically, no. Once he vacates the office, vacates. He can't sign any form as a director in that report and all. And we are supposed to comment that whether he is a qualified, disqualified or not. This is the one.
Maybe the upside to that is you are not interested in continuing in the company. Don't file the KYC there.
That's all.
Yeah.
No, you should look at both these sides. So it's favorable for me because the promoter is not leaving me. I want to get out. What is it called?
What if the scenario arising 26 because now KYC is 3 years?
3 years one. So you learn wait till.
No, because let us say, as you are saying, within 3 months we are not filing, get disqualified. But if I have filed at 1st March 26, then I have to wait till 29.
Correct. So that window is too long for you to wait actually. But that's one exit option which is available. Yeah.
What are the other scenarios where DIN will be deactivated?
See, the other scenario is the one this only. Not filing of KYC, system automatically deactivates. There is no other scenario by the system and it's no.
But then the lecturer is exactly deactivate. Assuming I am director in current company, by virtue of deactivating this, I have become.
You vacate the office house.
Yeah, that is wrong.
So just by filing KYC, I again become the director. Or I have
You
to
can't
go
be
through-
recommended, you should get reappointed.
Go through the
Yes,
process.
that process.
So one
Can you file DIR 12
Sir?
again? Can you file
Yes.
DIR 12
Yeah,
again?
of course. See, once he vacates, no, there is application on the company to file DR plus for vacation of office as per 167. That with 170.
For
So
appointment
company will, appointment okay again. At least vacation also they should file, no, one form. As per 170.
Already deactivated. Already.
No, DIN is deactivated, but you have to vacate, no. The office also as per master data. For that 170 subsection 2 says clearly you should file a form.
But by virtue of 167 is anyways vacated in the records of
Correct, sir. As per record of the company it is vacated. How public will know if you don't file the form?
There is a specific drop down button in DR 12.
You select the deactivated.
Yeah.
Otherwise it will not go out.
Yeah. So another issue, I think we all know it, 3 years was the non-filing period for to get the disqualification to director. Correct, no? 3 years consecutively in one company he has not filed return, generally he vacates the office. Correct? Now that period is going to be reduced to only 2 years. Only 2 years. How 2 years we should count? Like AGM was supposed to be held by September, first return by 30th October, second return, that is a annual return, should be filed by the 30th November. First year over. Next year again you take, by 30th November of the second year, this man will vacate the office. If 2 years returns are not filed. Unfortunate situation, in the existing provision, he will at least continue in the existing company where the default is there. In the proposed amendment, they said there also he will not continue. He will vacate all the companies, including the company with the defaulting company. 2 years only. Now, one more addition to this 2 year, If he is a LLP, if he is a DP, designated partner in any LLP, which he has not filed return, right now it is 3 years, they are going to make amendment 2 years there also. He will vacate not only in LLP, in all companies also. This is again very draconian provision.
Like how DIN has to be activated every year. Same rules apply for DIN also.
No, there is no concept of DPIN. What is the DIN allotted under the company set is considered to be DPIN as per LLP. There is no DPIN. One small change they made as per the disclosure of interest by director. Generally, when you become director, you should make a disclosure about where and all you are a director or the shareholder or any other interest. That is one disclosure. And whenever there is a change, you should make some disclosure within 30 days from the change. One more disclosure is called annual disclosure. So you have a event-based disclosure, there is a periodical disclosure. So appointment is event and change is event. Those two they are retaining. The periodical disclosure, if there is no change, they say don't disclose. They say we are saving the director's time and all. So no need to get annual disclosure.
So they are doing away with LLP1.
Yeah. That I think 149, this is about audit. Independent director, Cooling period 5 years is there, no? The 2 terms, after 2 terms, there should be cooling period of 5 years. This particular cooling period till date is applicable only from the company where he was an independent director. Now they say cooling period for all other associates, subsidiary, holding company. They are saying you cannot be associated during the cooling period in any manner. So that is the one proposed. And the next one, they are going to add one extra feature in the 164. 164 is the disqualification section for the directors. Personal disqualifications are there, and subsection 2 as per some other company has not filed return, you will get disqualified. So like 2 baskets are there. One is the personal disqualification, or due to the association with the bad companies, you will get disqualified. Now they are adding in for both the cases, the board of this company, may be applicable to only listed companies or maybe public companies, I understood, should make every year disclosure or get a proper information from him by way of a disclosure that he is a proper and fit and proper person. Like a banking case, we get a bank, RBI we should file fit and proper person, whether he matches the requirement and all this. Now for every company, maybe once it is disclosed, it is going to be the fit and proper criteria should be obtained from the director. Yeah, one of the disclosure was, nowadays lot of penalties are imposed, like Sir was telling too. So whenever there is a penal provision as per the related party transaction, director will become disqualified and he will vacate the office. So again we need to certify annual findings. We don't know, you will not be knowing it, but he must, some other company is a related party, there he has paid some penalty. Over. He will become disqualified. More complicated things going to be. The next one is audit committee transparency. That's what Sir was telling. Because it is presumed that audit committee is an independent body with independent persons. And if they have recommended something and board did not agree for that, generally they are not recording anywhere, simply they are recording in the minutes and closing down. Public would not be aware of it, shareholders also would not be aware of it. I am talking about public listed and unlisted public companies, where section 177 is applicable. They are not bringing why this particular recommendation was ignored. Now they are going to make a rule. Why the board has not accepted the recommendations? The audit committee has a power to accept, power to reject, power to saying that what is that, they don't want to look into that file itself. They have that power also. They deny it also. These things should be recorded in the board minute. Now the board's report should be recorded. So that public would be knowing that why this particular, especially related party transaction, audit committee approval is mandatory. Why you went ahead, that we should tell. Yeah, this is another provision. Till date, I think Sir was telling about KO. So what is that? CFO. Okay, whenever you get appointed as a CFO of any company for that matter, there is a clarification or the presumption from the ministry. You being a appointed as a, in any company for that matter, appointed as a CFO, which is a regulated position. Filing of DA return is a mandate. In one of my case, they penalized me. Someone started using the CEO. Then immediately there is one section that under 70 subsection 2, you should file a form DA saying he is this man, because this man goes with the visiting card, CEO, go to the bank and various other regulatory, and we don't know whether really is a, so they want to verify where is the source. So that is the reason MCS, as per their understanding, it may be small company, they are saying don't designate the people or don't use the designation which are regulated by the act. You got my point. You say finance controller, I am not regulating. Once you appoint anyone, whether it is required or not, as per the statute provision, once you appoint someone and someone is carrying his business card like a CEO, CFO, company secretary, then you should file. Okay, fine. There is no problem. Okay, we agree for that view and we have filed the form TA12. Suppose company has some hostile environment, this CFO left the company. Now companies are not filing DR12. And there is no mechanism, a CFO to inform the ROC. However, director has a mechanism called DIR11 form. So we are facing the problem, being professionals, we don't have any way out to inform the ROC that I left this company or I am sacked, whatever it is you want to convey, Please remove my name from your data bank. If you are not removed, no, you will not get employment somewhere else. So then there is a recommendation to introduce similar provision for DIR11. Similar form for us also. Now government is going to make a similar provision which is applicable for all companies. So whenever there is a CEO, CFO, company secretary who is not a board member and he was appointed and form was filed, his data is available at MCA. To get rid of the data, company should have filed DR12, company is not filing, but having acknowledgement of leaving that company, show with that acknowledgement, file your own form by using your own digital signature, and ROC will remove your name from there after verifying whatever it is needed. So this is a welcome move for us professionals to protect from the especially hostile environment exit.
No, this is a very good move actually. I mean, if you see the analysis of the last few months CFO exits, it's huge. And people have made remarks and then they have come out of the company. So I think this will help you to exit peacefully. As he said, today if you don't file DR11, your name is still there on the due signatory details. How it will go? It will go only because you file some form. So I think this is a very good move if it comes, which is a form to intimate your exit by the CFOs. Yeah?
Sir? I didn't get you.
When are these amendments?
See, now bill was placed before the parliament. Parliament sent for the JPC. They may next winter session they are expecting to get this passed. They are going to do it, but now they have invited our comments, professional comments. So I suggest you make the whatever suggestions from your end, representation you can make to our institute. They will listen.
So the applicability will be from the date of assent of the president or from 1st April?
No. That assent of the. No, here, whenever bill is drafted, that time also they will invite comments. Those invitation comes from the ministry. But these invitation now today we got it from the JPC. So that is the difference. JPC will hear you, all your this, because JPC is formed with different party people. It's not that one party. So I suggest to make representation. Yeah, this is one decriminalization. As sir told you, 1956 Act, 658 sections were there. All sections were criminal sections. Whatever you do, it used to say fine and imprisonment or imprisonment was there. In 19 56, while transforming, they also brought in 2013 also all same, fine and imprisonment. But all of a sudden, ministry said, no, let us decriminalize similar to the FEMA. You know PERA versus FEMA? PERA was a complete criminal law and FEMA is just like a civil law. So they want to convert this particular Companies Act as a civil law. So in 2nd November 2018, most of the provisions they converted into civil. So in the process, one by now if you find some 10-12 sections max are only criminal sections. Only some 10-12 relating to the very serious offence, like there is a prospectus, there is a fraudulent incorporation, and if there is a public issue and you use the money fraudulently, if there is a public deposit, their imprisonment is there. If there is any serious fraud allegation as per section 2 and 2, SF4, there is a criminal offence. If there is a fraud, I think the fraud reporting, more than 1 crore you should report to the central government. Those cases, 6-7 cases or maximum 10-15 provisions are there now relating to the criminal. All other provisions are converted into decriminal, that means in-house mechanism. That is again in-camera proceedings will be there, the e-adjudication. So whatever the penalty they want to levy, they can levy, and they put clearly the amount also. And you can't go beyond that. And that money cannot be reduced also. As sir was telling, I think one duplicate DIN case, sir was telling 99 lakhs. Because section was giving the penalty shall be per day 5,000. It has no minimum maximum. It is like a meter. How many days you are having duplicate DIN? That many days 5,000 over. And it is being in-house. ROC is bound by the MCA circular. ROC has to keep up whatever the words of MCA. Will they reduce? Answer is no. Even you go on appeal. Again going appeal to whom? Again departmental person called regional director. Again he is guided by the spirit of the ministry. Will it be reduced? Answer is no. Correct? No. I did at least some 10-15 compounding applications till date. Now all the cases they rejected. Either they confirm wherever technical errors are there, some calculation mistakes are there, or someone there are 2 cases are there. I think that we can, like independent directors are there. There is a section 149 subsection 12. It excludes unless he has given his consent, unless he ignored the advice, unless he has signed, unless he has like that. Those cases only he is held responsible, not all other cases. Similarly, company secretary also, if he has done his, like example, I think sir was telling, CFO was penalized for non-appointment of independent directors. Tell me, CFO whether has a power to appoint an independent director. Whether he has any power to appoint an independent director, he can't enter into the board meeting. He has no say in the board meeting. Appointments are done by the board. So in those cases, we can certainly plead. What is your role? It is not there to maintain the board and board should have composition, all those things. You cannot have it. Same for company secretary, there is section 205 subsection 2 says, if the company secretary does his jobs as per the law and company secretary can escape, it is written clearly. It says, report about the complaints of Companies Act and all other applicable provisions before the board. It is report about the compliance. It is not that ensure the compliance and report. Purposefully they have written it. So your duty is there to clearly indicate when you have threshold limit, you should appoint independent director. When there are threshold limit, you need to appoint a women director. This noting should go and place before the board. So in my case, which we played, where RD also reduced the penalty, company secretary did its job, her job. So you can't penalize. So they reduced 5 lakhs in that case because of this permission. So except this circumstance, RD is not ready to reduce anything. We paid some 20 lakhs, 30 lakhs recently for the delay in conducting AGM or delay appointing the KMP, all this stuff. So one should be very clear, like you all know that TDS, if you are delayed in filing your TDS return, daily 200, that's all. Correct, no? See, I am the liquidator, I have done at least 60 and above voluntary liquidations. See, in all the cases that counsel from the IT comes with the penalties are imposed in the portal. I got penalties from 2011 to till date. Company has safely ignored them. Once you log into the portal, the traces portal, you will get that 200, 300, whatever they levy, daily penalties. Simply ignored companies. Now, they are coming submitting before the NCLT. Sir, this much liability is there, what to do? By the time I already distributed the money, then immediately there is one provision in the liquidation provision. If it is found at any point of time being company is insolvent, as a liquidator I can file an application to reclose the liquidation itself. Means cancel the liquidation and bring back the company to the others. So then I told to the board, if you don't pay this money from your packet, I will go and apply, so your liquidation will get cancelled. It will come back to you. Now they started paying. Recently we paid, almost 5 lakhs money we paid. Now tell me, 200 is a meter only, no? Here also ROC penalties are only meters. One should be very careful now. So all this, they made it shell only, not less than amount. Sir, I think I have done my job.
So, no.
See, the whole idea I think for you. Sir,
there is one scheme which you have to discuss, so 10 minutes are there.
so I am just trying to tell you, whatever the journey we should focus, maybe destiny, I am unable to complete circular. At least I want to make it clear what I want to try with the connected subject.
Okay, multiple link. What is a multiple link? Popular cases are, these are all old, it cannot happen in recent times, these are all old where...
What's happening, sir? We paid recently.
No, means, I'm just saying, when originally the DINs came out, so people in great hurry applied for DIN because those times there was no restriction, limitation, nothing. And this person left for Dubai or UAE. Now because of the bombing, this person comes back and he doesn't remember whether he has a DIN. So coolly the company applies for one more DIN, and then what happens is a pop-up where it shows that when you start filing the form, it shows that you have a duplicate DIN. Now, it's a very dangerous situation. There is a form which is DIR 5 which is there, and you have to quickly surrender one of the DINs. Now, which DIN to surrender? That itself becomes a big problem because whether the latest DIN has to be surrendered or the old DIN has to be surrendered. Now, if the unfortunate incident of your appointment in the latest DIN has already happened, then you are stuck. Okay, this is the scenario which we handled around 1 year back. Now, what are these cases very important? Now, I said I thought I had lost my original DIN. It can never happen. There is nothing called losing your DIN. Now, how this only you can use a DSC, not a DIN. So once a DIN, always a DIN. So you have only one DIN in your lifetime. Please understand that. Now in this case there is a 2024 order where this lady was holding on to a duplicate DIN for close to, as Thirupal said, 3,802 days, which means more than almost 11 years, right? Now look at the penalty, into 500 per day of default, which has come to about 19,51,000. If you think this amount is big, now this is the second case on multiple DIN. Now this is a Telangana case. Now they sent the DIR 5 and they said that by mistake we have applied and all of those things. Merciless is the issue because the calculation of the penalty is as simple as this. Total number of days multiplied by 500, 27,46,500 rupees is the penalty. And these are all decided cases where they have been made to pay. So, please understand, CA as a director, if at all by mistake you become a director, I would not recommend you to become a director. I am very clear about it because for the last 25 years I have been talking only about directors related issues. If at all you become a director, now the first and primary thing is about your DIN. Now look at the next thing. If you have a DIN and you have not mentioned the DIN in any of the documents that you are going to sign, that becomes a huge sin. Now how does the ROC catch you? Very simple, right? Now whenever there is a letterhead, What the ROC does is, he does not read thank you, yours truly, faithfully and all that. That is ignored, okay. First he goes to the top of the letterhead. Name of the company is there, email address is there, telephone is there, address is there. There is a big SIM called CIN, not SIN, CIN. If you don't mention that, finished. It's as bad as the GST not being displayed in your office. Now that is one portion. Come to the bottom portion. You would have signed saying, yours truly for so-and-so company, Rahul, and then left it there. Now below that, designation is important. Below the designation, DIN is important. Now you don't do it. There is a company called Shubhamangal India Midi. Failure to mention DIN, okay, in the financial statement. That took continuous offence for about 6 years. Now look at this. So 2,62,500 is the cost of not mentioning the DIN in your financials. So please ensure that every financial, wherever the name of the director is mentioned. Now when I make a presentation to the board, the first question is, which all places should I mention? In an inter-office memo, should I mention? No. Exempted. Any communication that goes outside of your office, even if it is to a vendor, try to mention that thing. It's not mandatory. 158 very clearly says, to regulatory filings you have to mention, whether it is income tax, customs, ROC, whatever, please don't ignore this number wherever possible. Regulatory filings. Second is commercial transactions. When you talk about commercial transaction, it could be a contract with a vendor, with whatever. Here it is recommendatory, it is not a mandatory. So mandatory is for regulatory filings. Do not miss out on this particular issue. And most important, financials. Yeah. So Thirupal, you can get back to the facilitation scheme. Yeah. Now, apart from this, there are a lot of cases, just to give you a heads up, if you become a director, there is IICA, there is a live case where a director got penalized for not having registered in IIC. You have to, it's not, because that's what the revenue stream I told you, very clear. All these are profit institutions which have been created, they have to be supported. If your name is not there registered, you cease to be a independent director. Then KYC, of course, he has mentioned in detail, but there are a lot of cases pertaining to KYC which they have not done and they have not penalized. So, understand, as a director, there are some basic things. I have not even gotten into the roles, responsibilities, duties and all that. These are the basic housekeeping rules as far as the director is concerned. So, very important, ensure it done. Then there is another cranky provision which is, of course I have a case study which is on MBT 1 also. A director failed to give and they got penalized. Then there is one more thing which is called 149 subsection 6. Like how Thirupal just said, fit and proper, there is something called proficient. That is, you are supposed to have passed the proficiency test conducted by IICA. To qualify as a director, don't worry, if you onboard, you have 1 year time to study and pass. But if you want to onboard, it's a prerequisite that is called a proficiency test. So there are two things that you have to give undertaking. One is on integrity, another is on the proficiency. Now who says so? I say so. I means the director says so. It's all called a self-declaration at this point of time. Okay, these are only the basic housekeeping issues. Now what Thirupal is going to come is all these cases were pertaining to either not filing the form or whatever. Don't we have any way out, exit? Now the government has opened the window. Unfortunately, this window should be opened every year. Okay, this is what my recommendation is. One, the revenue of the government will go up. I am only recommending for their sake. Okay, because collection, this is all like traffic police month end. So you should just open it before the March year end and open it out for companies so that one, it becomes a write-off in their books and profit comes down the list. And number two, it rectifies the forms that were not filed. Okay, now, does this qualify for all the forms? No. Okay, yours.
Sir, sorry to interrupt. On a completely different context. So if there is a code resolution or something, it could be very silly. Can we put the soft signature of the directors?
What signature?
Soft signature, and like let's say
There
an
is-
image of the director.
There is DocuSign, there is digital signature, there is physical signature. Apart from that, I don't know which signature. Okay.
So digital signature can be used on the financial statement.
Yeah. But why would you take the risk? Okay. No, it has a timestamp, my friend. So that is what I'm saying. So
If you are able to.
you have to be super confident. Your auditor should be sitting next to you. Please understand. So the report should go like this to like this. If it's a multinational company, don't dare do all that. If it's an Indian company, everybody is in the same room. Use your yes.
But same room will be proved. It get proved by the system because of the IP address. Don't worry.
So maybe
Yeah.
yeah.
We will just quickly run through the scheme. So basically, this scheme is there to encourage the companies to three ways. One is that the company has has defaulted in filing the annual returns till date. It may be 1956 Act to till date. All forms are covered related to annual filings, auditor appointment. Okay, annual filings, 23 AC, ACA as per 1956 Act, 20B, Form 66. Then 23B, I don't know how many of you are aware, that was supposed to be filed by the auditor. Now ADT one by the company. So even that form is been pending, not filed. You can use this scheme. The filing fees is there only some 10% of the filing fees, only 10%. From 2018 onwards, the daily 100 rupees came. Earlier there was no 100 rupees, the maximum they were collecting only 13 times. In the old act or new act, maximum 13 times, 7,800 something used to come. Now because of this 100 rupees, daily 100 rupees, it is running into, in one case we calculated 2011 to till date they have not filed any form. The company got stuck up. And company has this one land around 3 to 4 crores worth. And filing fees, we have filed for the revival company. The filing fees, if we are able to get the revival order during this currency of the scheme, we will be saving 90%. If we not, the filing fees is going to be something like 1 crore, close to 1 crore. Since that you have not conducted AGM, you should go for compounding also. That is different. That is not covered in the scheme. But the compounding cost is around 2 crores. Property is 4 crores. Now they are deciding whether to revive the company or not. Okay, so this scheme is there to file all the pending returns relating to the annual AGM related, not every form. Only AGM related forms. And if suppose you have filed the form, now you don't want to keep the company active. The next thing is after filing the forms, you can keep this company into the dormant status. Dormant status. That means next 5 years you can keep the company dormant. There are certain dormant stage forms are there, MCS 4, 3, 4 and all. Not regularly, you don't need to conduct board meeting, you don't need to conduct AGM, all those things are exempted. So next to 5 years you can be in that state. So in a lifetime, any company can be there as a dormant once in a life. 5 years. Not every 5 years. Only once in a lifetime. Okay. That is the second basket as in the scheme. Third basket is about you don't want to do it. Now lot of forms pending are there and you don't want to file it and you want to close down the company. That is the third basket. For that they have given clarification. What is the clarification means? Till you have done your business, you file a form. After that you have not done any business, no return. Means no need to file any return. But straight away you go with the strike out. For that again filing fee is only 25%. Now the filing fees for the strike out is 10,000. You pay only 2,500, you file for the strike out. Assume that a company which has not at all done any business. It has not done any business from since inception. For them, no need to file any return. No return is to be filed. And just file the form for the closure with a CA certificate saying that company has not done any business. Even they are not brought the share capital, which is supposed to be 1 lakh. That also they are not brought. This undertaking should be given, and one affidavit should be given, and one indemnity bond saying that if as of now there are no liabilities, if there are liabilities in the future, we will pay it off. Both directors should give it, and with that consent of the shareholder, like manual consent you can obtain, and you can file for the closing. That concession. So all three baskets are available at your disposal. Okay. However, there is no mention about condonation of delay in conducting the SCM. So we have a UDIN issues, correct? No? You can't generate the UDIN any year backdated. So if there are any UDIN already generated and balance sheets are ready, signed but not filed, for them this scheme is wonderful. There is no further requirement to go for compounding for AGM and all. We should presume that.
Along with this, the institute should have come with the UDIN amnesty scheme also.
Yeah, in fact, our institute.
Then I think it would have solved a lot of problems.
Company Secretary Institute has brought one scheme which ended today from 1st April to 2025 to till 26 to till date. They say any UDIN from the starting of UDIN, that is UDIN rule came in 2019 like your institute. Till date, if there are any missed UDINs, if there are any revocation of UDINs, if there are any correction in the UDINs, three options are available, and you can do so. And the beauty of this scheme, I don't know, in the history of the Companies Act, generally they don't give anything advance. If they want to release the scheme today, they will announce it, tomorrow onwards it will be effective. Whereas in this scheme, government well thought, let us give some breathing period. This scheme was announced 50 days in advance. Somewhere in February they announced it, 50 days in advance. I am going to open the window for filing from the April, means today's date, April 15th onwards. So they said we have given enough time to do whatever you want to do it, to prove it that you have done the law, either conducting AGM, whatever it is. And I am giving this time only lifetime, that's what the ministry says. We are giving lifetime opportunity to exit from the system if you don't want to have the, in my data bank. You think of it. If you want to be in my data bank, you should be compliant. One is you should have filed all the returns by using this scheme, and henceforth you should be compliant. Because once you complete this scheme, now they are going to completely move to the AI. They are going to deploy one after other for each process. They are going to deploy the AI. So that is a challenge. So it is advisable to all your clients, if already balance sheets are ready, let them file it. If balance sheets are not ready, at least you generate current dated, conduct the AGMs, if they want to make the company active, if there were businesses, and let them do with current dated, all these things, and you can avoid in this scheme, even for those kind of UDIN generation today's date, conducting AGM today's date, still there is a solace, consolence file, because there is MGT 7 that you need to file. As per the law, MGT 7 should have been filed with the due date of the AGM itself. Today you file, it will collect the filing fees from the due date. 10 years ago was due date. From 10 years means at least till 2018 it will collect 13 times. From 2018 to it will collect daily 100 rupees. So there you will get a 90% concession. So it is advisable for even for those companies, let them conduct the AGM current dated. Of course there is a non-compliance of conducting the AGM as per section 96. That some should go for the compounding, that is different rule. But at least filing fees with respect to MGT 7 can be saved. And MGT AOC 4, that is a balance sheet case, there is no concession because balance sheet filing fees comes only from the today's date. When you conduct the AGM today, it takes from today's date, it hardly 600 rupees will come. So there is no concession that is needed for that. I hope I made it clear. Correct? No. A company has not at all done any business, straight away go for the strike out. Just you pay 2,500 rupees. They are given time, I think 90 days time, no? Till 15th July 2026. So 90 days time is given. So now you think of it, advising your client. In any way you bring that company normalcy. The problem with, because of this, the question may come whether director will be qualified to be director because I didn't file 10 years. The answer is no. There is no remedy for the director who is associated to the company which he has not filed return more than 3 years. No solace, no relief for him. He continues to be a disqualified director even if you filed the return by using this scheme. Sir? 5 years, sir. Last filing was, see, you are not filed for last 3 years. In the scheme you are filing. That is continuity of the non-file compliance till this filing date. From this date to next 5 years you will be disqualified. So, to put a full stop to the default is a mandate now. Correct? No. To put a full stop using this scheme, you can put a full stop at a lesser cost. Tomorrow also you can put a full stop, but that time it will be cost will be more. So this is the scheme which is going to be useful, and it is well thought process what they have gone. Now, because now I know you all, L&T is there now as a vendor, probably L&T tenure is going to end. They are going to bring some new altogether different platform it seems to be. So they don't want to have these companies which are not compliant, not regularly compliant to be there, carry forward to the next system. This is the whole idea of the scheme. So scheme, any of closed companies you can't file, already closed companies no need to file, and already the verge of closing, like strike off you already applied, for them no need to file the return. So vanishing companies you can't file. Section 8 companies you can file the return but you can't close down. Section 8 companies under the scheme is not allowed to be closed down. So this is the total overall. In the slide we have decided, we have given a lot of FAQs also. If you go through the FAQs you will get answer also. So I don't want to run through the slide. This is the total gist of the total scheme. So it is favoring us also, favoring the industry to get rid of from the system. We can close.
Sir, any dematerialization of shares extension?
See, dematerialization, government doesn't want to extend further, and instead they did what they did. They enhanced the small company limiter. So because of that, at least 60-70% companies are not required to be demat, not to have demat. So that already they have done it. No further extension. Only if there is a non-compliance between the 30th June to till 1st December 2020 where this penal capital was enhanced. During that period you may need to go for a compounding or adjudication. Otherwise, if you are not a small company, demand is a must. If there is any violation in allotting the sales in demand mode, transferring the sales in demand mode, you have to go for adjudication. No other option.
So ADT 1, ADT 3 is not applicable.
ADT 1? No, ADT 1 is there. See, these are the forms. See, these are the forms, sir. I'll show you. See, these are the forms.
So 3 is not there.
No, ADT 3 is not there. ADT 3 is not an annual form. No, it is incident based. ADT 3, your form it is. Of course, ADT 3 has no 100 daily 1,000 rupees. Daily 100 is not there. No? It comes maximum 7,800 fees. Even you file after 10 years. And current means 1956 Act also forms are there. This summary. Once you file the return, there is one provision under 454 of the Companies Act subsection 3. Once returns are filed, any company for that matter, no further prosecution against the company or against the director in terms of the non-filing or filing delay. They have given a guarantee in that particular section. So no prosecution for the company for not filing or filing delay. They will not prosecute. But you have to file the form first. The data is available, they don't want to prosecute.
So, thank you all for a very patient listening.
Thank you. Thank you for giving the opportunity. Thank you all.
Thank you, speakers. I'm sure the particular session was really knowledgeable and a lot of gain out of this particular session. I request CA Kavita Parmesh to come on the dais and hand over a token of appreciation and a memento to the speakers today. Can we have a round of applause for the CS Thirupal. Thank you, my dear members. Thank you, speakers, for gracing today's invitation and accepting and coming forward for this session. Thank you. Thank you.